Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
So we've been talking retail a lot the last couple of weeks. Now we're going to discuss Kohl's, and this hasn't been a pleasant experience for any shareholder. What kind of data do you have out of LikeFolio that kind of supports this downturn that we've seen in the stock? And I was just discussing with Kevin before we came on that Kohl's, I think private equity was trying to take them out for $65, $60 a share just a couple of years ago. This has just been a dreadful spell for this stock.
Yeah, we're, I think, at $19 now. They were $47 about a year ago. So this is a rough run, especially if you're thinking about having almost exited at 60. So a tough run for Kohl's. And, you know, we're actually seeing it's not only some consumer macro trends against them, but also some company-specific stuff that's working against them. Specifically with the macro trends, you know, people are talking about having their credit cards maxed out at 24% more this year than they are last year. They're talking about shopping for deals, not nearly as much as you would think, given that, and they're talking about shopping for clothes a lot less. So, you know, if you're not fiscally responsible as a family, when you max out your credit card, that kind of forces you to be fiscally responsible. People are having trouble, you know, getting out there and spending. And so that's one of the things that we're seeing. We're also seeing some, you know, company-specific stuff that is a little bit concerning. The happiness levels have decreased. It was 72% not long ago on Kohl's, but now it's about 59%. It's had a pretty steady drop over the last month or so. But even if you go back a year, I mean, a year ago it was around 70%, and we're down to 59%. People are talking about decreased quality. They're confused about how the app works. They're complaining about different online order problems. So there's a lot of negativity around that as well. And I think a lot of it is leading to decreased purchase intent. People are actually just talking about shopping at Kohl's a lot less. In fact, it's about negative 17% on a year-over-year basis for the quarter that's about to be reported. It's actually, if you look at the quarter that's happening right now, that is from April 30th on, that far right bar, that's at a pace of negative 27% on a year-over-year basis. So whether they're reporting or they're giving guidance, we don't think that this is going to be a great report. We're not, you know, we don't think this is going to be the end of the world. It's not terrible, but it's just not the bounce that I think everyone was hoping for. Even when we look at their web data, it's down about 8% on a year-over-year basis. So everything kind of across the board is not great for Kohl's. It's not terrible, but it's just not great. And even when we compare it to some of their competitors, when we stack them up against Target, Dillard's, Nordstrom, Kohl's is the weakest of the four on a year-over-year purchase intent basis. So all in all, I'd say that, you know, the data does support this sell-off in this stock. The only silver lining, I would say, is that expectations have to be really low, given where the stock is. So any kind of surprise to not just the upside, but to the, you know, we're not dead and the bleeding might be stopped kind of side could be seen as positive. We just don't think that's going to be reported. Nothing in our data suggests any kind of big turnaround on this report.
Landon, it's important for a retailer like this to have a lane, have a place, right? Target can say that they're not Walmart. They're different. They're a little higher. They've got some different deals. What is the lane for Kohl's? Because they're not beating Target. They're not beating Nordstrom Rack. Who are they beating? But I'll give you one positive. The CEO and some top executives are buying boatloads of stock down at these levels. So there is some faith in the company's ability to recover from this. And frankly, at $19, you can see the ground from here almost. They do have a 10% dividend yield, not guaranteed, as you know, and they could cut that. And matter of fact, they may, for all we know, because that doesn't line up with the fundamentals of the company. But is there anything other than the top executives buying some stock? Is there anything positive? Because you're right, the companies that they're competing against, they're not beating them.
Right. I don't have anything positive. I mean, I do think that the CEOs and the top executives buying, I think that is really good news. I mean, you talk about insider information, they've got the most. And they're allowed to buy. You got to disclose those buys, and if they're buying, I think that really does say a lot. However, you know, if you've got dividend players out there and you're talking about a 10% yield and you can't hold that up and you cut that, there's nothing less attractive to a dividend stock investor than a dividend cut. So if they happen to do that, I think that could be really bad for the stock. So we'll see what happens there. But I agree with you on the executives buying stock. I think that's a fantastic sign. But unfortunately, that's all priced in. Everything's priced into it right now. So we know that they're doing that. We know, at LikeFolio, we know that all the data kind of looks bad. The consumer macro trends look bad. The company-specific consumer demand looks bad. The company-specific consumer happiness looks bad. So we don't see a lot of positive right now, but maybe they've got a great long-term plan and they think $19 is cheap over the long term. I just don't think it happens on this particular report.
Yeah, March 29th, CEO bought over $2 million worth of stock on this one. But Landon, I kind of wanted to, expand on that because it doesn't seem like Kohl's is in a good spot, maybe due to the macro economic environment that we're in at this point, where they don't have the grocery business, right? That the consumer that typically goes to Kohl's is having issues with inflationary pressures, right? And they don't have high-end stuff, a big swath of high-end stuff. So are they basically one of those retailers that could be the next JCPenney, perhaps? Or it's just not a good macro environment for this type of company because there's others out there in this space. Macy's has navigated a little better, right?
Right. I think you're kind of making a case that they're in no man's land. And I kind of agree with you. I mean, there's certain companies, we talked about Walmart the other day. There's certain companies that do well in economic upturns and do well in economic downturns. And I just feel like Kohl's might be a little bit lost in the middle right now. And they need to define that a little bit better because just like you said, if you've got that customer that the downturn in the economy or things tightening up causes them to go to Kohl's less, but then they're not killing it when things are going well. It's just like, where are you exactly? What is your strategy? So I'm sure they're thinking about that a lot. I don't have the answer. I just know that based on our metrics, again, I don't think this is the report where all the bulls can come out and celebrate. So I would be comfortable doing something like selling calls going into this. We don't have a super negative score. We're at -10, which is actually closer to neutral than anything. It's more of I don't think this is it type quarter. I don't think this company is going away. I don't think they're dying. I think probably eventually they will turn around, especially given that insider trading information. But I just don't think this is the quarter that it happens.
Any news on the Sephora? It says they're going to spend another $600 to $650 million to upgrade the partnership with Sephora. That we've always said when covering this stock, that doesn't look like a fit, yet they're adding to it.
Right, it is. I agree. That kind of puts them more in the no man's land category. It's strange. It's really strange. Like, you compare that to the Target Ulta, and it's just like, all right, I get it. And Kohl's Sephora is just, I don't know. It's just something isn't clicking with me. Maybe I'm not the target here, but three of us just don't get it. And I've not met anyone who just says, yeah, I get that partnership. So, they must be seeing something. In fact, our data is, of all of the data that we've got, the Sephora data is the best when it comes to Kohl's. So maybe that's why they're doing it, but it does look good as far as Sephora goes. But I just don't see how the partnership makes that much sense. But if they're investing more, obviously they do. And again, they have more information than I do.
And that was one of the caveats on that Target report, was that the health and beauty was doing really well. Yep. So maybe Sephora can help them out. All right, great stuff. As always, Landon, appreciate the data.
Thank you, guys.
All right, that's Landon Swan, co-founder at LikeFolio.